Hello and welcome to Business Weekly. A political crisis in Portugal sparked by the resignations in the government dragged the country deeper into the economic crisis. People took to the streets to show their anger about the austerity program, making its future even more problematic. Street protests are also linked to economic problems in Egypt. The country's economy had still not recovered after the 2011 revolution, when it was hit by the latest political turmoil. That's all for now. Looking ahead, Alcoa opens the corporate earnings season in the US on Monday, while the Eurogroup meets in Brussels. On Tuesday, the Eurozone's finance ministers will be joined by their EU colleagues for the ECOFIN gathering. German inflation for June is out on Wednesday, and on Friday we'll get the latest word on the Eurozone's industrial production output. Thank you for watching and see you next week. Hello and welcome to Business Weekly. Germany's Constitutional Court has been looking into the legality of the European Central Bank's bond buying program. Under that plan, the ECB has committed to buying government bonds if needs be. The Bundesbank believes that it's too close to illegal financing. At the same time, the ECB's inspectors returned to Greece as part of the Troika mission. Even though the International Monetary Fund has admitted bailout policy mistakes, the lenders are pushing ahead for austerity again. Let's move away from the Eurozone, and the foreign investors are focused on Turkey right now. The stock market fell massively as it's not clear yet what the consequences of the street protests could be. We'll discuss all that with neighbors. That's all for now. Looking ahead, the G8 summit starts in Northern Ireland on Monday. Tuesday sees the start of the Brussels Economic Forum, and the Federal Reserve's Open Market Committee announces its latest take on the US economic recovery. Eurozone finance ministers meet in Luxembourg on Thursday, and on Friday there is a gathering of the Economic and Financial Affairs Council. Thank you for watching and see you soon. Hello and welcome to Business Weekly. Japan's Prime Minister has been outlining his latest reforms plan. He wants to encourage foreign investment and simplify laws in an attempt to kickstart the economy, though investors remain skeptical about the government's so-called third arrow of stimulus measures. China has moved one step closer to a trade war with the European Union. Less than 24 hours after Brussels said it would impose new tariffs on Chinese solar panels, Beijing hit back with plans for an investigation into European wine imports. The European Central Bank has held its latest Governing Council meeting with Mario Draghi and his policymakers still under pressure to do more to support the region's economic recovery. That's all for now. Looking ahead, the Bank of Japan's regular monetary policy meeting takes place in Tokyo on Monday. On Tuesday, a major economic conference organized by the Austrian Central Bank starts in Vienna. Germany's latest inflation rate and UK jobless figures are out on Wednesday, and on Thursday the Dubrovnik Economic Conference starts. Thank you for watching and see you next week. Hello and welcome to Business Weekly. Europe is changing the emphasis on economic growth. The European Commission, for the first time, is moving to slow the pace of austerity in the Eurozone, worried that it's making things worse. In exchange, it urged the region's governments to focus on reforms, particularly of the jobs market. One of the most dramatic collateral effects is sky-high unemployment, especially among young Europeans. Almost a quarter of under 25-year-olds are out of work. Labour market reforms are needed everywhere, Brussels says, but France is at the top of its list. We'll discuss new European policies with neighbors. That's all for now. Looking ahead, the latest figures on car sales in the US are revealed on Monday, while the IMF presents its report on reform of the Spanish banking system. Wednesday sees the Eurozone's economic growth figures for the first quarter unveiled. The ECB's Governing Council meets on Thursday, and the latest jobless numbers in the US are out on Friday. Thank you for watching and see you next week. Welcome to the business review of the year. The economic crisis dominated 2012 worldwide, but Europe was hit particularly hard. Large and seemingly stable economies began to show cracks, successful sectors started to suffer, the European Central Bank took previously unimaginable measures to stabilize a more and more fragile business environment. Having started in the financial sector, the crisis dramatically affected banks in 2012. Some needed bailouts, others survived without state aid, but all had a difficult time. European policymakers searched for ways to save the sector. They finally gave the green light to a banking union and hopefully A fresh start for the whole industry. 2012 saw Barack Obama re-elected as U.S. president amid efforts to get the country growing again, while the world's second biggest economy, China, also fought to prevent a slowdown becoming a hard landing. The world's economic leaders have something in common. Both are applying the same strategy, economic stimulus. 2012 was another difficult year for the global economy. Some states powered through it in high gear, others needed help to overcome the recession. But even in the most trying times, there were signs of greater global cooperation, and now they face the challenges of 2013. Thank you for watching, and we wish you a good year. Hello and welcome to Business Weekly. Apple set a new record share price and market value just after the unveiling of its latest smartphone. The company received more than 2 million pre-orders in the first 24 hours. This is around 3 iPhones sold every 2 minutes. Will Apple overcome its rival with this new gadget? We'll discuss that with Mark Priest from ETX Capital later in the program. But first we look at Spain, where the government has to deal not only with the economic, but also with the political crisis. That's it for now. On Monday, quarterly economic growth in the Netherlands will be revealed. On Thursday, we get to learn the German unemployment numbers for September and the US GDP growth. And Friday sees the release of the Eurozone September inflation rate, while in Madrid, next year's budget will be presented. Thank you for watching and see you next week.
Hello and welcome to Business Line. Greece's newly elected Prime Minister and the Finance Minister have been on the European tour to meet their counterparts. Before going to Paris, Yanis Varoufakis met the Eurogroup's head in Athens. This is when he said that Greece has no intention to cooperate with the mission from a lending troika of the European Union, European Central Bank and the International Monetary Fund. It's not only his statements that are making big news. Yanis Varoufakis has become a sensation himself. His casual style has led to an explosion of media interest from day one. The 53-year-old has amassed thousands of followers on Twitter, where he calls himself an icon to the public scene by Europe's inane handling of an inevitable crisis. When he rocked up in London to meet George Osborne, it was all about the way he looked on the social media. Varoufakis had a leather jacket over an untucked bra. Back home in Athens, he prefers his bike and while traveling, flies economy class. Maybe next time he'll take low-cost airlines. Some of them are promising cheaper airfares because of the lower oil prices. But Ryanair warns that will have repercussions. Fuel hedging is a very widespread practice for airlines. It is how they reduce their exposure to volatile oil prices. This kind of contract allows a company to establish a fixed cost so that it won't be hit hard if oil prices go up. But what if they go down, like now? This is exactly what's been happening to airlines worldwide. There are no rules. Each company has its own approach. Ryanair says it hedged around 90% of its fuel needs for the year ahead, but others are not using this practice at all. As a consequence, they could benefit more from cheaper oil and, what's particularly important for us, would be able to lower their ticket prices. European airlines typically hedge up to between 60 and 85% of their fuel needs for the coming year. Their Asian rivals tend to hedge far less. Many of them have been ultra-cautious since the oil price turbulence back in 2008. And from planes to the cars, with more on the vehicles of future. This is it. This is IT. Spain's economic recovery has accelerated more than expected in the end of 2014. Moreover, it was the first annual growth in 7 years for the economy. And we've now got the first data for 2015 from Spain's job market.
Joining us from Washington is Euronews correspondent Stefan Grobe. Stefan, since 2008, the Federal Reserve has launched 3 rounds of bond buying programs. The first 2 were mainly aimed at stabilizing the financial system and the latest at quickening the recovery. How effective was the third round?
Well, the Fed would tell, though, monitoring and that it helped lower long-term interest rates. Now, the opponents on Capitol Hill and in academia, the Fed would tell you that QEs are stagnant and that the economy in general grew pretty erratically. So that thinking is the middle class got creamed again, while stock owners only got richer.
For nearly 6 years, the central bank has been pumping money into the US economy. Now the bond buying program is over. Is the economy strong enough to do without that stimulus, and can it grow on its own?
Well, that's the million-dollar question, right? Let's remember, QE3 has swelled the Fed's balance sheet to unprecedented levels. The money the Fed created to asset bubbles that could cause financial instability and potentially another crisis. Then there's always the risk of a severe blowback that could be triggered by almost anything.
All the Fed's decisions are closely watched outside the US, but this one is of particular importance. How would it influence Europe and the emerging markets?
What happens to the dollar, what happens to the oil price, and finally, how will things shape up within the Eurozone?
That was Stefan Grober, Euronews Washington correspondent. Stefan, thank you.
Thank you.
Hello and welcome to Business Weekly. Protests in the streets and closed banks after Cyprus's financial time bomb exploded. For a while, the island has been asking Europe for help, but the conditions for that aid, when it finally came, shocked many. For the first time in the European financial crisis, ordinary bank depositors were being asked to contribute through a one-time levy on their savings. Cyprus's parliament strongly rejected the plan, which raised many questions. The island's banks remained shut for a week, but what is hidden in their accounts? Who has their money there, and what could this mean for the global banking system? We'll discuss reactions to the rejection by Cypriot lawmakers of the initial plan. As a result of this, there's been a lot of discussion about money laundering through banks. That's all for now. A shortened Easter week for much of the financial world, but still lots happening. UK economic growth is revealed on Wednesday. On Thursday, we get the latest on the jobs market in Germany and US GDP, while Canadian handset maker BlackBerry posts its quarterly results, and Italian bank Monte dei Paschi publishes its annual data. Thank you for watching and see you soon.
Hello and welcome to Business Line. For years, Europe has been trying to diversify its gas supplies, particularly those from Russia. Recently, the EU endorsed the Energy Union plan presented by the European Commission. It involves infrastructure projects to link European energy networks, transition to renewable energies, and more transparency in supply contracts. As a result, the European Commission will be able to directly influence commercial agreements on gas supplies, including Gazprom contracts. While the EU has been working on how to reduce its dependency on Russian gas, Gazprom wants to reduce its dependence on the transit through Ukraine. And that is why the company's CEO headed to Athens. Gazprom chief Alexei Miller warned that the EU's planned energy union will result in higher prices. Speaking at a conference in Berlin, he said if the European Commission will insist on equal prices, and of course, as you understand, base price is not the lowest price, it will be the highest price. The European Union imports about a third of its gas from Russia. For the first 9 months of 2014, Gazprom delivered more than 122 billion cubic meters of gas to the Western European market, including Turkey. That's the bulk of Russian exports. The EU does not seem happy with it. Last autumn, the Union launched energy stress tests simulating two scenarios: a complete halt of Russian gas imports into the EU and a disruption of the Ukraine's transit route. And it appeared that the damage can be managed, but there are a few ifs. If Europe allows a free flow of natural gas among countries, if it maximizes the use of storage capacities, if it allows high prices to encourage the switch to alternative fuels, and if it completes infrastructure projects on time. No doubt that for the moment it has not been all done, and the region does depend heavily on Russian gas. But it's also clear that Russia would be hard-pressed to survive the loss of the European gas market. Gazprom sales to Europe account for more than half of the company's revenue. The gas giant usually contributes almost 1/5 of federal budget revenue and generates around 8% of Russia's gross domestic product.
which contracted at the beginning of 2015. The Western sanctions hit not only Russia itself, but also its neighbors. Although Finland underscored its support for the restrictions, the country is more exposed than any other Euro member to a slump in Russian demand. The most northern Euro nation now hopes to overcome a 3-year-long recession with its new government. Finland's best known and once its most successful brand is Nokia. The company is said to be quietly plotting a return to the mobile phone market it once dominated. No matter which device you have, web browsing is getting easier for you. In a world that's increasingly turning to smaller screens, Google decided to give a little push. This is it. This is IT. That was it for now. Thank you for watching and we'll see you next week. Hello and welcome to Business Line. This week's regional elections in Spain have tested the voters' mood, and the results were a verdict on the country's Prime Minister and his economic strategy. And this verdict was clearly economically motivated. Several years of austerity have built up a strong background for young alternative parties who promise to put an end to austerity and corruption and stand for people's interests. In 6 months from now, Spain holds general elections. While campaigning, the country's Prime Minister said by that time the economy will be growing at 3% and 500,000 jobs will have been created. But people gave their votes to those who protected them during the worst times, like the new mayor of Barcelona. To help us understand the local and regional election results in Spain, and particularly in Barcelona and Madrid, Euronews talked to Fernando Vallespín. He is a political science professor and analyst with the Autonomous University in Madrid. Take a look at what he said. Let's now take a closer look. 6 years into the crisis, the country's economy is finally seeing some decent growth. During the first quarter of the year, Spain's gross domestic product grew by 0.9%. Madrid expects the annual growth to be close to 3%. So why don't people feel the recovery, or why don't they feel it strongly enough to support the government? Well, they're busy looking for jobs. Unemployment is the country's biggest problem. According to Eurostat, it stood at 23% in March. It is less than last year's over 25%, but the country's labour market has not recovered. According to official figures, only 1 in 10 work contracts signed at the beginning of this year were for permanent positions. Moreover, the number of temporary contracts is growing twice as fast as permanent contracts. An interesting fact, between 2008 and 2013, over 3 million jobs disappeared in Spain. According to the polls, that's pretty much the amount of votes the Popular Party has lost from the last local elections 4 years ago. Now from Spain to Poland, where the political situation has also been changed as the country elected a new president. We've seen the political changes in Spain and Poland. It's now time to move to the corporate world. Business leaders are not elected, although sometimes hundreds of thousands of people depend on them. This is it. This is IT.
That was it.
And that was it for now. Thank you for watching and we'll see you next week. Hello and welcome to Business Line. This week we focus on the labour market. Recently there have been more signs the global economy is on the recovery track. But does it mean the world's labour market is no longer in crisis? According to a new report from the International Labour Organization, job seekers haven't found this solution. They've just adjusted to the new reality. What seems to be a flexibility could be just a desperate decision to earn at least some money today rather than looking for a stable job tomorrow. As we've seen, having a job does not mean feeling safe, nor does it mean being fairly paid. And it doesn't always depend on your professional skills. Sometimes it's all about what you can't change, the gender. The International Labour Organization says average wage demands, generally speaking. Let's take a closer look at Europe. In the European Union, women's gross hourly earnings were on average 16.4% below those of men in 2013. On closer inspection, the problem looks more serious. The gap varies significantly, ranging from just over 3% on Slovenia to almost 30% on Estonia. In Europe, as elsewhere in the world, there are explained and unexplained reasons behind this gap. For example, an individual's level of education and experience are in the explained part, and they could also be overcome. The unexplained suggests discrimination. The gender pay gap is generally much lower for new labour market entrants and tends to widen with age, for example, as a consequence, breaks in career or part-time work due to childbearing. Motherhood is considered to be one of the underlying reasons for the overall gender pay gap. The Organization for Economic Cooperation and Development estimates that, on average, across the OECD, a 50% reduction in the gender gap in labour force participation would lead to an additional gain in GDP of about 6% by 2030, with further gains in case of a complete convergence. Have you heard of POTUS? Does not ring any bells? That's not a new pop star, even though he has millions of followers on Twitter. This is it. This is IT. Gucci and Yves Saint Laurent have accused Alibaba again of selling counterfeit goods. It's the second time in a year the French group has taken the Chinese e-commerce giant to task. Alibaba denies all the accusations and says it spent millions of euros on hiring 2,000 employees dedicated to anti-counterfeiting and consumer protection work to prevent the problem. That was it for now. Thank you for watching, and we'll see you next week. Hello and welcome to Business Line. There was a night of jubilation in Tehran as people celebrated news that Iran and the world powers had reached a framework nuclear deal, paving the way to an end of years of crippling sanctions on the country. For many of those singing, dancing and driving, people hope that the deal will be a game changer. Iran and its people have been largely shut out of the global economy for years. The sanctions have been applied layer after layer, but the situation deteriorated dramatically in 2012 when the European Union joined a US-led effort to shut down oil trade. Deeper measures were implemented that included limiting access to shipping insurance and blocking Iranian banks from the SWIFT global electronic payment system. In 2013, the economy shrank by more than 5.5% and inflation soared to just under 40%. According to a study by the US Congressional Research Service, Iran's economy is about 20% smaller than it would have been without sanctions. Here comes the question, what's next for the second largest economy in the Middle East and North Africa after Saudi Arabia? Euronews' Dalin Hassan discussed it with Nur al-Din al-Hamouri, chief market strategist at ADS Securities in Abu Dhabi. Take a look. Bada found solutions, Iran's foreign minister tweeted from Lausanne as journalists awaited a press conference. It's an interesting detail as internet restrictions in Iran itself have been argued over and criticized, and Facebook, Twitter and Google have been filtered. There have been more fights over social messaging apps like Snapchat. We have more on this one. This is it. This is IT. Cyprus has lifted last remaining capital controls it imposed on its banking system during the financial crisis 2 years ago. The country was the only Eurozone member to restrict these transfers. It had to go that far to prevent a run on the banks. Cyprus president says the Mediterranean island is recovering well, despite 3 years of recession. It's not only Cyprus that has been recovering. The whole monetary union is doing much better. Closely watched surveys have hit their highest levels in few years, suggesting that the Eurozone may finally be returning to health. That was it for now. Thank you for watching, and we'll see you next week.
Joining us from Washington is Euronews correspondent Stefan Grobe. Stefan, since 2008, the Federal Reserve has launched 3 rounds of bond buying programs. The first 2 were mainly aimed at stabilizing the financial system and the latest at quickening the recovery. How effective was the 3rd round?
Well, the Fed would tell, though, moderating, and that it helped lower long-term interest rates. Now, the opponents on Capitol Hill and in academia, the Fed would tell you that QEs are stagnant and that the economy in general grew pretty erratically. So that thinking is the middle class got creamed again while stock owners only got richer.
For nearly 6 years, the central bank has been pumping money into the US economy. Now the bond buying program is over. Is the economy strong enough to do without that stimulus, and can it grow on its own?
Well, that's the million-dollar question, right? Let's remember, QE3 has swelled the Fed's balance sheet to unprecedented levels. The money the Fed created to asset bubbles that could cause financial instability and potentially another crisis. Then there's always the risk of a severe blowback that could be triggered by almost anything.
All the Fed's decisions are closely watched outside the US, but this one is of particular importance. How would it influence Europe and the emerging markets?
What happens to the dollar? What happens to the oil price? And finally, how will things shape up within the Eurozone?
That was Stefan Grobe, Euronews Washington correspondent. Stefan, thank you.
Thank you.
The Italian government has come to the rescue of its national airline Alitalia. The loss-making company was running out of cash and fuel supplies when it finally got a cash injection from the state-owned postal service group. The capital hike and credit lines aim to keep Alitalia flying while it tries to work out a strategy that could make it profitable again.